Good morning, everyone. This is Bruce at Fleet Capital Management. It is Saturday morning, July 23rd, 2022. Today, we are going to talk about trend and trend analysis in some detail to show you what I'm looking for, exactly what I'm looking for. And then I'm going to show you what that triggers as far as trading inside your portfolio. So the two are inextricably linked. And I want to show you exactly how that affects your portfolio. So as always, the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell a security. This is always on my YouTube channel, which is Fleet Capital Management. And if you have any questions, always feel free to email me at fleetcapitalmanagement.com. Happy to talk to you. Before we move into the charts, I want to show you there's been a slight change, a nice change to the first page of our website, which is fleetcapitalmanagement.com. Now you can go just to the home and you can click on schedule a video call with Bruce. You can still go to the more section and my calendar and things like that. But this is just a shortcut. So if you need to do a phone call with me, a video call, just click that. Also, if you want to see the latest YouTube video, all you have to do is click market analysis videos and it will take you to that YouTube page. So I think this will make it a bit easier for people to navigate around and get in touch. And I encourage you to use that. Okay, let's go to charts and talk about trends. This first chart, and again, when I show you charts, unless I say otherwise, we are looking at the S&P 500. That is what I base my trend analysis on, just so you know. On the left side panel, I have a weekly chart, which means each bar represents the entire week of trading. And on the right side, I have a daily chart. So each bar is one day. Let's start with the one day. You can see something very significant. How long it will last, I don't know yet, but we went from consistent pink and purple bars, which are weak and strong downtrend bars. We've been there since the beginning of the year. We went back to weak, and then we had a couple days of amber. Amber means we think there might be a trend change happening, or it's just a breather. But then we went to the light, let's call it light blue or aqua colored bars, which is a weak uptrend, but we got our first go signal in quite some time on the daily. We also, that was accompanied by rising momentum. We want momentum to be above this zero line when we are looking for a bullish market, and it may come back down to the zero line. That's normal, but we want to bounce off the zero line and stay above. You can see down during this significant downtrend, we were down below, we touched the zero line, continued down below, touched the zero line, went below. This time we went above, but it was a false breakout. So, you know, nothing is perfect, but that's what we're looking for. So in any event, we got our first go bar on the daily. Then we go and look at the little longer time frame, which is the weekly bar. And what you can see clearly, I believe, let me get a drawing tool out so you can see this, is this was the low that I considered the low for this bear market. And you can see what we have, and this is a number of weeks, we have a higher low than this one. And we also have, I'm not sure exactly where I want to draw this, but let's just sort of do it like this to make it easy to read. We have a higher high, and that's on the weekly chart. We still have a pink bar, which is considered a weak downtrend. We want this to change to amber and then to a go trend. But hey, we'll take it. It looks like it's starting to change. If I were to draw the line, even from where I called the market low, we have higher lows and we have higher highs. So this is called a channel, and it's encouraging, but I don't know how long it will last. We will take a look. We'll look at that. So that's the first couple of charts I want to show you, which is daily and weekly, and things are starting to look better. Let me go to a little bit shorter term. Bear with me one sec. There we go. So then we use, this is the daily, but it has shorter term moving averages on it. But the same thing, you can see the new go trend, and we're starting to see the moving averages come up and cross. These aren't long-term trend. This is more short-term trend. We're also seeing, and I don't want to spend too much time on this because it's complex, but this is the ADX DMI chart. The red line is negative DMI. The green line is positive DMI. When red is above green, you're in a downtrend. We have seen a cross here, but it hasn't been confirmed or supported yet by the ADX line. What we want to see with the ADX line is we want to see that line turn up and go through the red. That would be a very strong indication of a bullish trend. So these are things that we look at. And then let's continue on and look at that trend, and then I'll pull it all together. This is a chart that you've seen me use for forever, for 36 years. I have customized this chart. These are the ATR dots, and I used to use just one level of ATR. Now I use 2 levels of ATR. I have found it to be much more efficient. And when we have these darker ATR colors stacked, that means we're in an ATR downtrend. And you can see that we came back up. We had a nice little rally, went right up to the ATR line, also to the 50-day moving average, and fell back down. That's normal. Here it went up because that acts as, remember, what resistance is. It's like a ceiling. Fell back down, went back up to that level, fell back down. Here's the change. The change is now we have the dark above, the purple above, but we have green below, and green is part of an uptrend. So what I call this is an NTZ, or a no trade zone, because we're just going sideways. In order to have an ATR trend, bullish trend, this price needs to keep moving up, and eventually that will drop off and we will have two, a light dot and a blue dot underneath. Then we're in ATR uptrend. The other thing we want to see is this green line is the 20-day moving average. This is the 50-day. This is the 200. For my more return-oriented clients, I want to see this 20-day cross above the 50. It doesn't have to cross above the 200 for those clients. For more conservative clients, it does, and I'll show you how that works in a minute too. I also want to show you one thing here. This is the S&P. Is we have some, this here is support. Remember, it's a floor. This was resistance. We have broken through resistance. Friday, we came back down, but we didn't break that resistance. So that's now acting as support. Resistance becomes support and vice versa. But we do have 2 more levels of resistance above. They're not very far away. And if we get above those 2, we have some pretty clear sailing to the north of us. And that is also something that I would like to see. And then there's another couple of symbols that I use. I'll get an annotation tool real quick and just show you. I use on this chart something called the MTI, and I use, this is called confirmed, a confirmed call. We've been in a confirmed down for quite some time. And in addition to that, the MTI has been below 1. All these numbers right now, the number you can't see is 0.92, but it's still below 1. I want to see that above 1, and I want to see this switch to a confirmed call. So I've just thrown a ton at you, and I did it on purpose because I want to show you how it all comes together. Okay, let me go back to this chart for a second. Before I show you how it comes together, I just thought of something. I want to show you that when we're in a no trade zone, remember, I've been talking about ARKK, which is an investment that made us a boatload of money for a long time, and then it fell out of bed. It was in a pretty clear downtrend, and then back June 24th, it went into this no trade zone, NTZ zone. You can see the light dots down here and the darker dots above. And in a no trade zone, we're basically just trending sideways. So there's no reason to make a trade. We don't know if it's going to trend up or trend down. This 20-day on here is getting ready to cross the 50-day. If that crosses, and if we get an ATR DMI signal, which we do not have yet, we're going to start adding that to more return-oriented clients. So let me go over there and show you what I'm talking about. So there are quite a number of tools that I use. There's actually 9 of them across the top here. We've looked at all of them. The shorter term 821 is ST is short term, and the DMI is the cross, and that I showed you. And then the MTI needs to be above 1. The DO is another signal that I use. RSI, confirmed call. So all of these things are what we just looked at. So what I do to make it easy for me is every morning before the market opens, I go through every single one of these indicators, every single one, and I note, you can see here, it's clearly been in a downtrend, meaning the 8 was below the 21. And the DMI was in a downtrend. I haven't talked much about DMI. The MTI was below 1, downtrend. So I go through and I mark what everything is. And you can see there's been an awful lot of red on the board. By the way, the ADX is confirmation or strength of trend. And if you look at down here, when the ADX is below 25, actually I use 22.5, that generally represents a weak trend. We haven't been really trending much. We've been in kind of a weak trend. So this is strength of trend. Everything else is trend, okay? So you can see on 720, we started to get some neutrals and one up start to show up on our chart. That's very nice. You can clearly see it because it was all red before. The next day, we started to get a couple of up notices on our chart. Really nice. And we maintained this neutral. And then on Friday, we continued with our up. We still have a down here. And we got a new up on the go, no go trend chart. And just to remind you what that looks like, there it is. There's the go or the up on the go, no go trend chart. And now in our ATR dots, we're in a no trade zone, which I showed you also. Now, here's how this all comes together for you, okay? I call it group 1 and group 2. Group 1 has stated to me that greater returns with risk management are important, but their primary is they're trying to generate greater returns. Group 2 is more downside protection over greater returns. They still want good returns, but more downside protection. Well, okay, that's important. So what I'm looking for on here for group 1, the one that's a little bit more aggressive, we'll call it, is I want a go, no go, an ATR, and a 2050 signal. So here I have highlighted those 3. This is the more aggressive. This is what I'm looking for. We have the go, no go up. We're in a neutral zone in the ATR. Remember, we're between the dots. And the 20 is still below the 50. Let's just go back and take a look at that. Here we are. Let me go back to the S&P 500. We can see that we're in between the dots here. We have a go signal. The 20 is still below the 50, but it is climbing nicely. So for those more aggressive clients, what I want to see is go, no, go positive. We have that. I want to see this break above. I want to see the ATR in a more bullish pattern. We don't have that yet. And I want to see the 20 cross above the 50. It doesn't need to cross above the 200. This is more aggressive clients. And if I see that, I will show you what that means. But before I go over there, for the more risk adverse clients, I want to see all indicators up. That is a much more conservative uptrend call. So 2 different things. So now let me show you how that affects your portfolio. Well, currently we're in a downtrend. We have not switched to an uptrend either for group 1 or group 2. And group 1, just a reminder, we want to see, well, don't worry about this confirmed down. That's on a downtrend, but we want to see ATR, go, no go, and 2050 above. So we're still in this area, which is what we do in a downtrend. And we've been doing some option trading for those clients, not for group 2 unless you opt in. And those options have been doing very well. It is a way now that we can make money as the market is going down. We haven't made a huge amount, but we have certainly made money as the market is going down. And if we go into an uptrend and then back into a confirmed downtrend, we'll start using some inverse ETFs too. So we have tools in the downtrend, but the market looks like it's trying to switch to an uptrend. So what happens in an uptrend for group one, seeking max returns? Remember, all we need is ATR above both dots. We don't have it yet. Go, no go in a go pattern. We do have that. And the 20 over the 50 moving average, we don't have it yet, but it's getting close. All of this is getting close. If and not if, when this happens, and we have a more aggressive bullish trend signal, you will still have about 30% in your defined outcome ETFs. But we will be adding individual stocks. We will continue with options. We'll just be buying more on the upside options. We will be adding more pure growth oriented ETFs to the portfolio. And we may even add some up leveraged ETFs that double the rate of return of the S&P, but I want to wait until we get it confirmed up for that. So once we get the 3 up calls on group one, we're going to start moving towards full investment. We probably won't be completely invested, but right now we're only about 35% invested. We'll probably get up to 65 or 70% invested very quickly. And for group two, remember, I want to see everything in more of an uptrend pattern. You still have about 60% in defined outcome ETFs, which are doing very well, meaning they're doing exactly what we hope they would do. They're protecting us on the downside at maturity. And I will be adding more growthy oriented ETFs and some stocks. So you will get back to 100% invested. So I hope that makes sense. So this is how we do it, is we haven't gotten the aggressive uptrend yet, but we're close. We haven't gotten the more conservative uptrend, but it's building. It's certainly building. If you look here, there's only 3 downs left. If we get and this one's really close. If we get a couple of these more up, this one should go up very soon, very soon. Then we'd only be waiting on the confirm. You're going to get more fully invested. So I hope that makes sense, that it's not done by happenstance. Now, let me show you a change that I have made because of this long bear market that we've been in. Initially, I thought in a bear market, we would continue to hold, especially in group two, the more conservative group. But now let's just say we don't go into an uptrend and we just stay in a bear market for the rest of the year. I don't think that's going to happen, but let's just say it does. Once your defined outcomes hit maturity, I cannot sell them until they hit maturity because you give up that downside protection. I will not roll them into new ones. And the reason I have made this change, and I've actually made it for both groups, the more aggressive group and the more conservative group, is because even though these are offering very significant downside protection, the investments are working. You don't get the downside protection until the date of maturity. But because it has been so discouraging to clients in both groups to see the value of their account fall, even though that fall is protected, I'm not going to roll those again until we're in a new uptrend. So if, let's pretend it's January, this past January, we're moving into this bear market, and we had quite a few of these things come to maturity in March and in April. We would have, going forward, we won't roll those into a new security. We will just be sitting in cash. So you don't have to see that downdraft. And I'm doing it in both of these. And I think it's going to make the psychological part of your investment experience much better. Even though mathematically, I think it's better to hold them. It's kind of 6 of one, half a dozen the other. I'm not going to hold them because it's very uncomfortable for you to see your account values go down, even though they're protected, So I don't think that's going to be the case. I think we have a long time till that happens. I think we're moving back into an uptrend. And the first group that will start to get reinvestment is group one. The second group, very shortly after that, will get group two. And everybody, hopefully soon, will be in a 100% invested position. Now, the last thing is, another thing, little change, not a big change that I'm making, is I've tightened my stops. Stops are when do we get out of an investment, whether it's profitable or it's not profitable. because let's just say the market starts to break through, we go into uptrend, which is exactly what I expect to happen. There's no one that says we can't go into an uptrend and then it roll over and try to retest the lows. This might be clearer to see. Yeah, here, I think this will be clearer to see. Let's say we continue in this uptrend. That is possible, and we're going to get fully invested. We're going to get fully invested because this could just continue. Lots of bear markets and consolidating markets, when they go back into an uptrend, they don't come back down. But sometimes we go into an uptrend, it goes back down to test the previous low before it really starts to rally. I don't know if that's going to happen, but it could. It's kind of a 50-50 to tell you the truth. So the thing we're going to do to protect against that is we've tightened our stops. Every type of security has a new and improved or tighter stop system that we will use. Every single security, so that we won't roll over and ride these big downtrends again. We'll just stop out. The risk to that, because there's good and bad to everything. The risk to that is, let's say we're in some stocks and we get stopped out and the market just immediately turns back up. Well, we've missed a little bit of that, but we'll just go right back into more stocks. I mean, there's always investments we can go into. So a couple of minor changes. I won't belabor that point to make it easier for you to stomach the roller coaster of the market and spend more time in the up market and less time in the down market. I think that's going to be very, very good for all of you psychologically. And I think that the future looks bright. I hope we can, I think we're going to get this 20 above the 50. I think we're going to get price above these ATR levels, and group one's going to start getting invested to take advantage of those potential profits. And then once we get a confirmed up, which is all of them across the board, our second group will get fully invested. You're already 60% invested with your defined outcome ETFs. So there's a lot of math involved in this, but I hope this helped. These are your trend analysis, which is the most important thing. And now I've shown you how does it actually affect your portfolio when we go into it. Finally, one other very minor change, but it's not actually minor, it's change I made on our options trading, which group one is involved in options, group two is not unless you opt in. We had one option, everything in green, everything that's in color is closed. It's a done trade. We have one trade that's open right now. And anything that's green was positive, obviously. Anything that is negative was a negative trade. Here's the thing. I've made an adjustment so that if we have a negative trade, we did have a negative trade, this number will be no more than about 20%. Because what I want, a break-even trade on this style of trading is, if you have a loss, it offsets one trade of gain. Does that make sense? So if this was 20%, then we had one loss, these two will offset each other or break even. Right now it's too many trades. It's like 2.5 trades. I want to get it to be one trade. And I want that loss on the one trade to be somewhat equal to our average rate of return on our positive trades. I don't know if that makes sense to you, but the point is it will be much easier. We're doing fine, and it will be much easier to maintain much higher rates of return, because the reality is we have about an 80% win rate. Right now we're at 87.5, but our target is 70 to 80% win rate. So if we can lower that loss amount a little bit, that's going to be very positive as well. So minor adjustments, everything is good. The market is moving in the right direction. Will it continue? I don't know. I don't have a crystal ball. That's why we use analysis, technical analysis, to know when to go back in, when to come back out, and give us the highest probability. And remember, your defined outcome ETFs, which are the vast majority of everybody's accounts right now, are doing exactly what they were designed to do. They are protecting on the downside, but I know you don't like to see the account value go down between now and maturity, which is when you get your money back. So we've made those changes, not to belabor the point. So hope all this helped. It's all about trend. We are trend followers. The new front page of the website makes it easier for you to schedule a call with me or get to the market videos. And that is the story. So please enjoy your weekend. I know it's hot out there. It's not hot yet here. It's about 69 degrees, which is pretty darn perfect. But we're supposed to have a heat wave next week, go into the 80s, which for us this far north is pretty warm. So I hope that helped. I hope you enjoyed this. Please email me with any questions or comments. Like to know what you think, and we will, continue on. So that's a story for this Saturday. I may start doing these on Friday nights. I've had a couple of requests to start doing these on Friday nights, so we'll see if I can get that done. In any event, enjoy your weekend. Back with you Monday morning. Bye-bye.